guys, John Michael with Peridot. I hope you're doing well. Today I'm going to talk to you a little bit, I'm calling it sort of the 101 of tax planning, just things to consider when you're thinking about what does it mean when we talk about tax planning, what are some things that we look at. None of these are in particular order. Sometimes the orders change on when we look at these and what we know and we're going in. But one thing that you want to make sure you have on top of is your bookkeeping infrastructure. You want to make sure you have a good bookkeeping infrastructure so that when you're trying to figure out where your income's at, you're trying to figure out what's going on, you're looking at relevant and real-time data. It's hard to do really good tax planning if you don't know where your income's at, or if it takes a while to figure out your income or what's going on, and before you know it, it takes a couple months to get that, and we're already lost a couple months, and now we're looking at historical data. So we try to make sure we have a good bookkeeping infrastructure, try to have something to where it's up to date, so when we look at information, we're looking at adequate and real-time information. We talk about the financial situation. Some underpinnings of that is if you're starting out, you want to make sure you're just starting out by separating the business and personal stuff, using an independent bank account that you're running all your business stuff in and out of. The bank's tracking it for you, because if you do that from the beginning, when you grow into a bigger and larger business, that paradigm's in place and you have bookkeeping software and everything, it's downloading from the bank account, and you're using adequate and good information, which in turn is when we get to tax planning, we need adequate and good information. We don't want to tax plan away from income when in actuality you had a loss, right? So good, adequate bookkeeping infrastructure, very regimented and very, on top of it. And that's a day-to-day thing. You want to be good at it as you go. Knowing what to deduct, knowing what's a business expense and what's not. That's all relevant, that's all real-time sort of stuff. I get the call a lot of times at the end of the year, hey, I have income, should I buy something? I never like the tax advice of telling somebody to spend money to save on taxes. The only time that's really good tax advice is when you need to spend money or you're doing it anyways, or there's something you may buy now or buy later, then you can have those conversations. But just spending money to save tax, that's typically not the best idea, because you're just saving the percentage of tax and you're still out of pocket. So spending money to spend money, never the best idea, but it depends on what you're wanting to spend it on. And then it's awareness. Well, is this something that can be deducted, something that can run through the business? Is that something that is relevant, a qualifying business expense or not? The next thing to be aware of when it comes to tax planning is nature of income. This is a big thing. You want to know that how certain income types get taxed. You want to know if it's earned, you're working on it, you're earning that money, then that's probably going to be subject to self-employment taxes. Self-employment taxes are Social Security and Medicare. So if you're doing something that is subject, and that nature of income is subject to self-employment taxes, you want to be aware of that, because there's other taxes that might not be subject to self-employment taxes. Passive income, rental income, royalties, dividends, interest, items like that are not subject to self-employment taxes. So you got to think, if you have money coming to you, is there a way or an opportunity to have it come to you in a different way? Is there a structure set up where you can pay yourself rent? Something like that. You want to be aware of nature of income, how the income's coming to you, and is there ways to divvy it up between that nature of income. Sort of also in this nature of income is capital gains. Capital gains can come in as a way that if you can somehow turn something into a capital gain, or if it's valid to do so. I mean, of course, if it's valid to do so. But it's all about understanding how the income's coming to you, how the money's coming to you. If you can do this and it comes to you this way, or if you could do that and it comes to you that way. Being aware of the nature of income. Nature of income is how this income comes to you, because everything gets taxed differently. You have earned income is going to be self-employment taxes, rental income not subject to self-employment taxes. Capital gains have, it's 15 or 20% capital gains tax rate. it's all different tax rates. And obviously, if you do this and it's going to be taxed at ordinary income, or if you do this, it's going to be taxed at a capital gain rate, it's going to be less tax. So that's what we mean by being aware of the nature of income. And that backs into another item that we would look at, and it's one of the key things that happens sort of at the beginning is entity selection. You want to be highly aware what your tax entity is, how you're being taxed. Are you a partnership? Are you being taxed as an individual, a sole proprietor? Are you an S corp? How does that work? You want to have a good understanding of how that tax entity affects you, how the taxes end up getting paid. So you want to have a really good understanding of your tax structure, but also you want to have an understanding of the options you have and what would be best for your situation. Is there ways to have more than one entity? You do something in this entity and something else in this entity. Maybe you can have them feeding off each other in a relevant way. There's all things you got to be aware of nature of income and entity selection, and you want to be hyper aware of what entity you are. If you're thinking, I think I'm an S corp, and I think I do this, and I do distributions, you need to get a better understanding of that, because understanding of entities, how they're taxed, is key to understanding sort of the 101, like, what are you paying tax on? How are you being taxed? If you know how an S corp is, you're going to know how to do things so that you can maybe minimize taxes sneaking up on you. You're not doing something that is hurting you in the long run just because you are ignorant to that. So have a tax professional or a tax planner have a good walkthrough and an education of, we have you in this entity, this is why, and you need to have an understanding of how that works and how that's going to benefit you, or it may not matter. There's a lot of times we get people in entities, or there's really complicated tax structures, and I get clients that come to me and and I'm inheriting a complicated tax structure, and the client may not have a understanding as to why that is or what's going on. They're like, I don't know, I'm just doing this. And it's like, really, the client, you really need to understand the purpose of that structure. And if you're not understanding that, then it may not be doing what it's set up to do, or you may be stabbing yourself in the foot and making it worse and not realizing it. Because at the end of the day, when something happens, it's got to be reported. You can't sometimes reinvent the wheels. You got to be aware of that as it happens. Again, with tax planning, with all of this, it's always an ongoing update. Something may be the way it is right now. It may not be like that next year. Some things may change. You may bring on a partner. You may have a family member join. Somebody may pass away. Things change. Tax planning changes. It's always an evolving thing. And sort of the key with tax planning, and this can happen on day one, a lot of times I ask clients this in the very first meeting: what is your goal? What do you want to do? I can get you in the best tax plan structure ever, but if you're going to be selling your business in 5 years, we just sort of made a convoluted mess. That's going to make it really hard for you to sell your business in 5 years. So we don't want to do that, right? So we want to set up something in preparation for that. So your goals, where you want to be in life. Obviously, not paying taxes, that's everybody's goal, right? Or paying as few taxes as you have to. But goals are key in figuring out a true and adequate tax plan, because you don't want to create something that doesn't fit into the goals of your life or your business. And you want to make sure that everything is going to flow. So goals, understanding, bookkeeping infrastructure, all these things are extremely important when we talk about tax planning, and it's important for clients to understand why and what goes behind it.